Well, good morning, everyone. This is Scott Thompson, the senior manager here at Schwab Coaching. Great to be here with you today. Shout out to Paul and Eva and Lawrence and Market is the best and everybody else that's joined us today. I have my friend Brett Crowther in the chat helping out there. You can follow both of us on x.com at Scott Thompson CS or at Brett Crowther CS. Be aware that there are imposters out there. If they're trying to solicit something from you, that's not us. So be aware of that. Thank you again for taking some time out of your busy schedule to be here today. A lot of stuff to cover. We got stopped out of a few things, so we got an opportunity to look for some new buy signals today. We're going to give an update with our trading journal. Also want to kind of update the three different strategies that we're using. Not a recommendation that you do that necessarily, but we're doing three different types of strategies. Wanted to give you a brief update on those and also show you a buying technique that you can use if you can't be, watching the market all day, which is basically everybody, right? So anyway, remind everyone this is a stock investing for beginners. So I want to show some resources and things that are available. I know many of you have seen that, but there's a lot of new people that attend here in our webcast and watch our recording. So I want to show them some resources. So be patient if you've seen those already. And before we get started, let me go ahead and share my screen and go over some important information with you. The information we cover today is for general informational purposes only, should not be considered an individual recommendation or personalized investment advice. We are using the paper money account. There are some significant differences between paper money and the real money accounts. So be aware of that. There's no guarantee that your stop orders, which we'll be talking about today, are going to be executed at the stop price. They could be filled significantly lower than those expectations. And then remember, all investing involves risk, including the loss of principal. Now let's jump over here to our Thinkorswim platform here. I want to give a brief update on kind of what we've been doing with our different sample investing plans. We started this back on the 9th of June together. And one of the things that I wanted to convince all of you is that time is one of your greatest assets. So one of the strategies that we're using is just to do something consistently investing. So we're investing in ETFs that track the S&P 500 or the NASDAQ 100. And I went and did a count this morning. We've been doing this for 44 days. So the plan was to invest $5 per day, but there's been like 44 trading days since the 9th of June. So I wanted to give you an update. We've invested $318.56 in these instruments that track the S&P 500 and the NASDAQ 100. And so we kind of hit a little bit of a milestone that I want to write over here. Last week, we finally ended up buying half a share in these instruments. So, I'm going to go ahead and write that in, own basically half a share in these different things that we're investing in. And I can't show you those because we'll do an update. Our next live only update will be on the 25th of August. But I did want to indicate that we've made a milestone and we bought half a share, so we own half a share. Now, one of the things I want to do is to make sure you understand what's going on. Now, if you remember, if you've been following what's been going on in the market, and I'll show you here in a second, but since the 9th of June, what has been happening in the market? Is the market up since the 9th of June, or are the markets down since the 9th of June? So you guys chat that in, let me know. But I'll go over here and show you the chart here. Let's take a look. So the S&P 500, the SPX, this is the index that tracks the S&P 500. And on the 9th is when we started our kind of plan. And again, our plan is to invest $5 per day, which ends up being about $7.24 per market day. And you can see the market's actually up a little bit, right? If you take your trend line drawing tool, check this out. This is kind of a cool feature on Thinkorswim. If you left click, here on the day that we started, and over here, the market's up about 6.3%. Now, here's the thing that I need you to understand with what we're doing. We're investing each day. Now, you guys have chatted in. The market's up since we started this. So here's kind of another kind of philosophical type of question. Would we have been better to invest $318 on the 9th or do what we're doing? What would give bigger returns if we invested all $300 on the 9th or if we did $5 a day or $7.24 per trading day? which would yield better returns? Okay. Again, let me state that question. If we invested all $318 that we've invested so far in the market, what would give better returns? Well, obviously, right? Obviously, if we had $318 to put in on that particular day, we'd be better off than we were by just adding money each day. So why don't we do that? Well, as a new investor, we may have not had $318. The point is we're trying to do something consistently, something that we can start as a new investor. And some brokers will allow you to, to automate that and invest every day. Schwab has something called stock slices that I'll show you here in just a second, that you could kind of automate some of your investing. But the point is if the market's going up like it's been doing, we're underperforming. We're underperforming if we'd invested all of that money. So, but the point is we want to develop some things that might be consistent. And you have to start somewhere. I really like what Jay Richardson said there in the chat. You have to start somewhere, and plan one is just to do something. If the broker you're using doesn't have kind of that stock slices or stock partial shares, then you would save that $5 per day and put it in a savings account or whatever until you could afford to buy a full share of whatever you're trading. But anyway, I thought we had some kind of significant milestone. It's, we're buying like 0.11 shares of these different instruments that we're tracking, and so it was kind of fun to get to half a share on that. So anyway, a pretty fun thing to be there right there. On plan number 2. Now, plan number 2, let me start off. We're investing $50 each week. So a very similar type of thing. We want to be consistent in our methodology. And what we're doing is we're investing $50 every week on Monday in the top 10 holdings of those tracking instruments using the Schwab stock slices. Now, just want to, again, tell you Schwab stock slices is not intended to be investment advice or a recommendation of any particular stock. Investing in stocks can be volatile and involve risk, including loss of principal. But let me show you, this is actually really kind of a fun thing to do with the Schwab stock slices. And I want to go through and show you what I'm doing, but I also want to, show you kind of how you can do it as well. So right over here, you can see these are the top 10 holdings, and this is subject to change. That may change over time. And then there's I think Netflix is in one of the top 10s, and like Berkshire Hathaway was in the other one. So what I did is I eliminated Netflix. It's not in this list. And we just chose these 10 stocks here. And so what I'm doing to simulate this in the paper money, because the paper money doesn't allow us to actually buy partial shares, we have to kind of force them in there. So let me show you. I'm going to click down here on Tesla. If you click the P&L open, you can see our purchase dates over here. And so I did all of them but Apple this morning. Okay, I did all of them at Apple but Apple, because I want to show you that one on the schwab.com page. But you can kind of see every single week on Monday we're going in there, and we end up buying just a very small share. We buy 0.0147 shares this morning. My purchase price was $339.82. My average price for all of my like what I got, a 15th of a share here, or 15% of a share. But one of the things that's kind of interesting is I want you to see is our average price is below the current price. The current price is at $342. So we're profitable on all of these except for one of them. Let me show you that one. And that one's Berkshire Hathaway. Berkshire Hathaway, we're still net down, but I'm glad we are, because it illustrates the point that I want to show about dollar cost averaging. Okay, so you can see here, our first purchase on Berkshire was when it was way up there at $493. And now this morning, when I added these partial shares, we were at $467. And so the average cost is kind of going down from our first point, and kind of a counterpoint, right? If we had invested our $318 in the tracking instruments on the S&P 500 and the NASDAQ, we would have been better off, right? But, and like Jay Richardson said in the chat, we don't ever know. So like if we had bought all, which isn't very much, but I mean, if we had bought all of our money on the first purchase here on Berkshire Hathaway at $493, we'd actually be down about $30 a share, right? But as it stands, because we've been adding shares, you can see our purchase prices have actually been going down because the stock's been going down. We had one week here where it was up above the previous week at 483 versus 474. But we are, I'm continuing to do this just manually because the paper money won't do that. Okay. And so Reggie's saying, can you buy stock slices on real money? The answer to that's yes. Okay. So, after you log into your paper, your account, and I'm just using a demo account here on schwab.com, but go to schwab.com and log in. And let me show you how to do this, Reggie, using what's called stock slices. So if you go over here to the trade page, and down here at the bottom is the stock slices. Again, not a recommendation of using this, not in investment advice. This is actually, if you've seen this the first time, go through here because this is actually really cool. Go through this little 5-step. We're just going to close it here. But can you, when we're doing this in live money, so, if you do it in live money, you can't do that in the Thinkorswim platform, but you have to do it on the schwab.com platform. Okay. So when you're here in stock slices, this is how this works. Now you can actually invest in up to 30 different stocks in the S&P 500. You have to do a minimum of $5 per stock. So what we're doing is we're investing $5 per stock in the top 10 holdings. And the way that you would do this in the schwab.com, again, not a recommendation, is you would just select the stocks that you want to invest in. And I wanted to show you this with Apple, okay? So you go to slices, you click on whatever one you want. And we've done this before, I think it was episode 2, and we're in episode 10 today. So if you want to go back and watch episode 2, I show a little more detail on how to do this. But you click the stock that you want to buy, and then you would just add all of them that you want to buy through there, okay? Go down to the bottom, click continue, and then what happens is you get to step number 2, and then you put in the amount you want to invest. And so we just have the one stock here, so I would put $5. And then you would select whatever account you want to use in your real money, right? Again, not a recommendation, just showing you how to do this. So after you've done that, you review your selection, and it gives you basically an order template. Now, if I click it now, it's going to give me an error because I don't have an account up here, and this demo account doesn't really have any way to do this. But you'll have a review page. It'll say, buy Apple, and it's like $5 worth of a $227 stock. If you want to reinvest the dividends, you can click that box and it'll do that for you, which is a cool feature. We're going to talk more about dividend trading and dividend investing in the future in this webcast. But today we're just talking about stock slices here. And, then you just place your order. So that's how you do it in real money. And it's on schwab.com. Now you can actually see those positions in your Thinkorswim account, but the Thinkorswim account right now is not set up to buy partial shares. So you do have to do that on your, on your schwab.com page. Now, how we're doing it, let me show you here now, because I didn't do this morning. I want to show you how to do this. Like you can see Apple, my last purchase on Apple was 8.4. So I haven't bought that this morning. So I want to show you how to do this in your paper money. If you want to practice doing this in your paper money, which is, always a great idea to practice something in your paper money before you try to do it in live, partly because then you don't have any real money at risk, right? So let me show you how to do that in your paper money. If you wanted to simulate that stock slices, which is what I've been doing every week, you're going to right click on Apple, and you want to come down here to adjust position. This is the only way to get that partial share in there, okay? So you click adjust position, and then what we're doing is we're going to buy, okay, now what's the plan? Well, the plan is to invest $50 each week in the top 10. That's $5 per stock. So we're going to take our calculator, and we're going to say, okay, I'm going to take $5, and I'm going to divide that by the current price, divided by 226.7. And I'm going to buy or kind of quote buy 0.2205 shares. Okay, so that's what we put in the quantity right here. All right, 0.0255 shares and 0.02250 shares. Okay, we hit enter, and then I click OK. And what happens is like if I click on my Apple, the last one I see is down, it says 8.4. Why is that? Well, when you use this particular feature on the Thinkorswim platform, it actually puts it down here in the unallocated area. It's right here. There's our little stock slice that we just bought. So I'm going to right click on that and move it to the group that I created called Stock Top 10s, $50 first day of each week, $5 each. Okay, so if I click this and it moves it out of unallocated and it puts it up here in our Stock Top 10. Now if I click on the P&L open, you can see here that we bought our 0.0225 shares. Purchase price was $226, which was way higher. Look at that, way higher than it was last week at $204. So our average cost is $208. Current price is $226. So we are profitable on our Apple position. Okay. So that's how this works. Truth is saying, does it let us automate to buy every week or every month? That feature, Truth, is not actually set up to be automated yet. I know they're working on it. I actually even talked to our some of our leaders about that, and they are working on automating the stock slices, which will be fantastic when it comes available. But right now, you'd have to do that manually every Monday to do what we just showed. All right. So I wanted to give you an update on plan number 1, which was the tracking instruments. We're up to half a share there. We are profitable, but it's underperforming if you just invested everything all at once. But again, we're kind of operating on the fact that we're college students. We're just out of high school. Maybe we're kind of starving students, and we don't have really $318 just to put in the market. So we're doing $5 a day instead of going out and doing something else with that $5, like Starbucks or eating out or whatever. We're trying to use our money wisely. Sample plan number 2 is we're investing $50 per week in the top 10 holdings. And, I kind of showed you how to do that on stock slices. Again, not a recommendation. The other plan that we're doing is this plan number 3. Now, if you go back to episode 3, you can see the plan itself. And let me show you again kind of where to get some of the resources for what we're doing next. Okay, so if you go to the Trader Talks page, okay, and I'll chat this in here in the chat so you can have that. But like our Trader Talks YouTube page, this is where a great resource for you. If you click over here on playlist, you can see number 1 is this is our Stock Investing for Beginners playlist. If you click view full playlist, then you can see all of the episodes that we've done, including, check this out, including 2 little videos I did on the 2 green arrow buy signal, and a few weeks ago we did the intrinsic value calculator. So here's that link if you want that one for the playlist, okay? So the other really good resource is this schwab.com /coaching/webcast page, and I think this is in there already, but we'll chat this in again. So this page, live webcasts and virtual workshops, if you scroll down here, there's a couple things you can do. Now, this has our whole schedule every week on here. You can click these, view 3 more events. So this is like our full schedule. If you don't want to look through all of that and you just want to find my stuff or any other coach, you can go over here to coaches and just click on my name. And I'm just teaching the one webcast right now, Stock Investing for Beginners. And then here we are today, and it doesn't matter which one you click on. You can click on one in the past, you can click on the one we're doing right now, you can click on one in the future, but this is important, okay? In order to get the trading journal that we talked about last week, you have to click on this link and then scroll down a little bit, and we have these resources right here. There's a new trader starting guide. There's a trading journal. If you click on this, it'll download it, and then you'll have to go up to your downloads. Usually it's the top right of your browser to open that, and then I would suggest you save that to your, your desktop or wherever you want to save it so you know where it is. There's a couple little videos here on how to use the trading journal. Plus, I have been showing you how to do that, and we're going to do that more today. Okay, so anyway, after you've downloaded the trading journal, and again, these links are in the description right now. There's a link to the trading journal. There's a link to the playlist. There's also a link to the chart that I want to show you right now in our, so this is, what we're doing. Now, our plan 3 is over here. And we've been, this kind of in summary what we're doing, okay? So we're using a MACD histogram and a 50-period simple moving average. That's what the chart is. We're simulating a mock $10,000 portfolio where we're investing up to $500 per trade or per stock. And we're also using kind of a no more than $50 of risk per trade sort of situation based on the entry price and the stop price. So I know if you're brand new, that was probably a lot of blah, 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 ginger, if you remember the old Fireside comic strip. But anyway, let me show you a few things that are kind of interesting. Number one is that I want to take a look at EMR. EMR had an interesting thing. They had earnings that came out, and EMR gave some interesting things here. We had a new buy signal. So like we bought it over here on, I think that was the, looks like, what day is that? The 16th. And one of the rules that we're using for this plan is when we get a new green arrow, okay, on the MACD. And again, this chart is actually in the description. You can get there for if you want to down, or, I shared this chart with you, so it's there. But this is a new buy signal here, and the rule, okay, now we're going to talk about kind of the rule itself, and then when it might make sense to adjust the rule based on volatility and some other different things, okay? So, right here is a new buy signal. If we didn't own EMR already, we could have bought it here. Some of you have been asking in the surveys, and some of you have been asking in the comments, and some of you have been asking in the chat, well, how about adding to our position? Well, you could do that. In fact, I want to show you one that I did. If I have time, I'll show you what, we did add to a position on one of these. But this day right here, the rule then is like at the end of the day, the moving average was at 129.31. And the rule is to put the stop 1% below the moving average, which I think is where this stop is or was, 128.01. Okay. Then, the stock went down, or went up a little bit. And then we got a red arrow on the MACD right here. And we don't do anything that day. The rule says don't do anything basically until we get 2 red arrows. Well, the 2 red arrows happen kind of simultaneously with the earnings gap down. Now, what do you notice? Let me zoom in on this real quick. What do you notice about that? Well, the stock gap down on earnings. And so here's the technique. We used this technique a few weeks ago on Intel, and we ended up losing more money than we put at risk. But I wanted to show you just kind of the same technique, okay? So on this day, I saw the stock was gapping down. I knew my stop was here at about 128. And I thought, wow, there's a good chance with the market being as volatile as it was on the 6th that the stock might drop down, stop me out, and then by the end of the day recover. I hate that. That drives me absolutely crazy. The whole purpose of a stop order is to get you out when the trend starts to change. And it drives me crazy to get stopped out and then have the stock be above my stock at the end, or stop at the end of the day. That drives me nuts. Okay. And so the trade-off here is what I did is I set this order up to be active at 3:30 p.m. Eastern time. Okay. Now let me show you how to do that. This is really cool. It's like one of my absolute favorite features of Thinkorswim. If you go to the monitor tab and up here in your working orders, we have EMR. And if I want to do this technique, I would right click on my existing stop order, do a cancel replace. And then right over here, there's a gear. And if you click on this gear, you can actually click this button that says submit at. And so what I did back on that day was I made the date for the day, and then I put in 1330 hours, which is 1:30 p.m. Mountain Time, which is 3:30 p.m. Eastern Time. And I set that order up in the morning, actually before the market opened, and I activated that order. I clicked save, and then you click confirm and send over there. Okay, now we didn't change anything, so I'm just going to delete that feature. But the reason that you might consider doing that is because you think, well, the stock's going to be really volatile. I don't really want to get out of this unless at the end of the day it's below my stop. Okay. First trade-off though, and this is important to understand, is that I could have been stopped out there at the low. The low that day was 123. My stop is at 128. What's the bad thing about that? Well, I could lose $5 or more than I was anticipating. And so, you want to be aware of that, because you're increasing your risk by doing this technique. And I don't always do this, and I didn't do this on all of our stop outs on this, but EMR was one of those. And I put the stop the last 30 minutes of the day, and then you can see it went down to 123, and then by the end of the day, it was up here at 134 almost, right? And here's where we are today. So, I mean, the trend is still kind of not working out the way I want it, but I did want to show you that technique that you could do that. And so we ended up not getting stopped out of EMR. If you've been following me and then, you moved your stop up to 128.01, you would have been stopped out here on that day if you didn't use this technique. And at this point, it's still not a bad thing to be stopped out of that. Here's another cool thing though, check this out, is we bought it back here. We bought it between like 126 and 128. I don't remember. Let's see where our purchase price is on EMR. Yeah, I'm in there at 128.44. So if we did get stopped out at 128.10, right? And there's no guarantee it would get filled at 128.10. That's just going to trigger a market order. But I would have had a very small loss, right? And so now that we've been doing this for about 44 days together, one of the things that's kind of interesting is you start to move your stop up. That original $50 of risk that we're taking per trade just isn't there anymore. In fact, let me show you some other stocks, okay? Disney, we did get stopped out of, okay? Disney, we bought it over here. We had a new green arrow buy signal. You could have moved the stop up there. We got 2 red arrows right here on the 1st of August. That would be a stop adjustment signal, okay? We're going to try to let the stock recover. It didn't. It gapped down here, and then it stopped me out at 112.10. And so we ended up losing a little bit of money. And, as I've been showing, we would record this in the trading journal. So let me go there and show you kind of how that works. And we won't do this on everyone just for time, but, Disney, I would have recorded that buy on the 12th when we bought it. We bought 2 shares at 118.93, and then we got stopped out. And I got some notes down. We got stopped out on the 7th, and then we would put the 2 shares that we traded, and we'd put our price in there, which was 112.10. And if I hit enter, you can see here that our loss was 13.66. Now, this is kind of an interesting thing to look at, okay? If we were willing to lose $50 on our trade, and this was kind of an interesting lesson for me to learn when I first started investing, is, I didn't like getting stopped out, but I'll tell you one thing I really did like is after I decided, you know what, Scott, I'm really comfortable losing $50 on this trade. I know I have to put some money at risk in order to purchase the shares. I know the stop order may not trigger right at the stop and could be filled lower, but I'm willing to lose $50 on the share on the trade. And I followed my rules on Disney, and I ended up getting stopped out with a $13.60 loss compared to the $50 I was willing to lose. And I got excited about that. I thought to myself, you know what? I kind of like this idea. If I'm willing to lose $50 and I only lost 13, I'm increasing my ability to follow my plan. And one of my favorite little sayings is, plan your trade and trade your plan. Okay. So Disney, we ended up getting stopped out. I didn't like that. We lost a little bit of money, and I much rather have a small loss than a big loss. Okay. So let's go take a look at another one. We got stopped out of BAC as well. Bank of America, we got in there on a nice little breakout. The stock rallied up and made a high, came down, tested that breakout point, rallied back up. And then we got a green arrow buy signal right here. And that says that you could adjust your stop to where? What's the rule? Do you guys remember where the rule is? The rule says put the stop 1% below the moving average. And so anytime, how often? Anytime. Anytime you have a stop adjustment rule or a buy signal or any type of rule, I always like to follow my rule up with this question. Does it make sense? Okay, so in this particular case, and I put a little note here just so we could look at it, but that particular day, you can see the MACD turned green. That's on the 23rd of July. And let me get rid of my little line so it's just not in the way. So 23rd of July, I got a new buy signal. The rule says to put the stop 1% below the moving average. The moving average, I believe, was at 45.65 on that day. And so the stop rule says to go at 45.19. And then if I ask myself, does that make sense? What I usually am asking is like, okay, where's the most recent low? And that low was at 45.01. Okay, so let me throw this question out to you. If your rule says to put the stop at 45.19, but a pretty solid level of support looks like it's 45.01, does it make sense to have a stop a little bit above that? If the rule or the concept, the principle is to get out of the trade when the trend changes. Well, for me, it doesn't make sense to put a stop at 45.19, so I decided to put my stop a little bit below this last low, and I just used an arbitrary 10 cents below that number, and I put the stop at 44.91, okay? Now, why 10 cents? Because I wanted to. Could you use 20 cents? Could you use 1%? Could you use 0.5%? Sure. But the point was I wanted my stop below that level. Now, in this case, we got picked off intraday there on Bank of America. We got stopped out. The stock looks like it's trying to bounce off support again here, which, will I be frustrated if we get stopped out and the stock just takes off from here? Yes. Okay. But let me give you, if you get nothing else out of our trade today, okay, or our webcast today, please get this one. It drives me crazy when people tell me, well, I hate stops because I got stopped out of it, and now that stock's $40 above where I got stopped out. Okay, this is my question. Why didn't you buy it again? Well, I got stopped out at 44.91, and I didn't want to pay 47 for it. Okay, let me give you the answer. Welcome to the market. Okay, if you're going to use a stop order of sorts, of any sort, if you're going to do something other than buy and hold where you don't have any stop order at all, and you're going to, try to get out of a trade when the trend might be changing, which is what we're doing, then your job is to rebuy this if it still meets your criteria and you have room to do it in your account. But if there's a new buy signal on BAC, then, it's my job in our portfolio here, sample plan number 3 for educational purposes, then I should buy that again. Well, what if you have to buy it at $49 or $50? Well, that's about where it would be right now because I've got this strong resistance. I don't really want to buy it in this channel, but my job now is to buy this if it gives a new buy signal. All right. So yeah, I don't like getting stopped out at 44.91, but the point is, if this stock meets all my criteria still, and it gives a new buy signal, then don't come telling me, a year from now, that if Bank of America is trading at $60, $70, well, I had that at 45, but I got stopped out. That doesn't fly. Okay. And I'm being really hard here because I wish someone did this to me when I started. Okay. My job is to watch this for a new buy signal. If I get it, I buy. Well, what if it's going to hit my stop again? Well, welcome to the market. Some of the trades don't work, and that's okay. All right. So that's a little soapbox there. Sorry about that. All right. So we did get stopped out of BAC. What would we do? Well, we'd go to our trading journal, right? Go to our trading journal. We bought BAC on 6/23. Here we are. This one we got stopped out on the 5th, and we record our 10 shares. We record our stop, which was at 44.91. And again, yeah, check this out. We were willing to lose $50 on this, and we only lost $6. That's a good trade. Yeah, it's a losing trade, but man, if all of our losses were way below our current, our risk tolerance, this is not a bad trade, okay? Yeah, we lost money on it, but did we follow our rules? Well, we go back and take a look at it, right? Okay, we bought it here. Is this a good buy signal? Green arrow, broke out resistance. I think that's a perfectly acceptable buy signal. It's a great buy signal. It just lost money. Yeah, no worries. That's going to happen sometimes. All right. So now, Veer is asking if we're talking about those. No, we're not. All right. This is just stock trading. All right. So that was our stops this week. I wanted to look at a couple because we got stopped out, we have some new buy signals. All right. So Gilead. And so I want to kind of give a disclosure here because we're trading the top 10 in the tracking ETFs, right? I'm not buying those stocks. So we're trying to avoid like Apple and AVGO and Berkshire and Costco as part of our, two green arrow plan, because we're trading those in our plan number 2. Okay. But Apple gave a buy signal, it kind of broke out. Just real quick, let me pull up Apple just so you can see it. Apple kind of broke resistance here with the 2 green arrows. If you wanted to buy that based on our rules, you could have done so. The stop would have gone below these lows instead of below the moving average. That's kind of, again, that doesn't make sense. Well, the moving average was a little bit above where I would say support was on Apple. And so the rule is to put the stop 1% below the moving average. But if the support's a little bit below that, then, some traders will look at going 1% below the low of the recent lows here, or maybe even 3% below that as a support level. Okay. But we took a look at Gilead. Gilead gave us a buy signal here, 2 green arrow buy signal with a breakout, and we bought it there at the end of the day at about 119.41. Okay, so that was Gilead, and you can kind of see that if we go over to our account statement page. This is our purchase on Gilead, and what I'm doing is, and some people have told me they really like this in the surveys, is I'm doing this program as if you were doing it. I'm every day I'm taking a look at our watch list, which is just the S&P 100. I'm looking for those new buy signals. I'm looking for those 2 red arrow stop adjustment signals. And so Gilead is just one of those that I found doing that process. All right. We had Johnson & Johnson. Johnson & Johnson gave a nice little breakout. Do I wish I bought it here? Yes, I do. But we didn't have room for it. We'd already had our full allocation. We had 20 positions here. So, we saw it break out. It's been trending up nicely. It gave a green arrow buy signal there on the 8th, and the stop would be 1% below the moving average. And, that's where we put it on Johnson & Johnson. So if I type in J&J, you can see what we did there. 2 shares at 173.46. Okay. Now, what I want to do here, the last thing, and we've got a few minutes left, is I wanted to go and take a look because we have some room to buy another stock. And let me zoom in right here. You can see GM, the moving average is rising. The stock was consolidating over here back in June, and it broke out above that $51.50 and 62-cent resistance level. Really strong breakout right here. Big old green candle, went up and made a new short-term high, and then it's been consolidating again, right? This morning, it was trading at 54.75 as the high, but now we're back down at 53.79, and the MACD is a green arrow. So technically, this has a buy signal on it with the green arrow on the MACD. The last green arrow on the moving average is there on the 23rd. The green arrows are green until they turn red. I know some of you are new, so that would be something to, take a look at here. And the question that we've been kind of or discussing over the last 10 weeks now is, do we want to buy something right at resistance? What do you guys think? Do you want to buy something right at resistance just to have it fall back down and perhaps change trend? Most traders and most investors don't like to do that. Okay, so with this rule set that we have, is technically we have a buy signal. The moving average is rising. We have a green arrow on the MACD, and we have a green arrow on the moving average. And so we could buy this. But what I wanted to demonstrate today was a technique that you can use to buy this only if it breaks resistance. Okay, so here's kind of a cool thing. Is how do I do that? Scott, I can't sit and watch the market all day. In fact, I've just barely got enough time to come catch your webcast live today. So how can I sit and watch this to trade? Well, you don't have to. Check this out. You plan your trade. Okay, so we can see that we have a lot of congestion in here, about 50, what's that? $54. We have a recent high over here at 54.30. We've got some other highs in here that, and I'm as a trader or as an investor, I'm thinking, you know what? I would really like to see this get above 54.30 to buy it. Now, if we had done that technique this morning, it would have filled and we'd be losing money on it right here. So you may, again, decide to ask yourself, well, let's put this in there at the last half an hour of the day, right? So let me show you kind of a cool thing. Now, this is called a buy stop order. You identify some resistance and you say to yourself, well, I don't want to buy it unless it goes above 54.30. And then you'll have to decide, well, by how much? Well, we'll use 20 cents. We'll use 20 cents today. If the stock goes above 54.30 by 20 cents, so it'll be a little bit below this current high today, but it'll be a nice green arrow or green candle if that happens. So we're going to use an entry price of 54.50. Okay, and that's just an arbitrary number. You can select your own. We're going to set our stop 1% below the moving average, which right now is at 51.01. So if we pull up our calculator, okay, 51.01 times 0.99. And so my stop would be basically at $50.50. Okay, so we're going to use an entry price of 54.50 and a stop at 50.50. So we're going to risk about $4 a share. So, you know, quick math, if I was willing to lose or invest or risk $50 divided by that $4, I could buy 12.5 shares of this. But what's our maximum investment per trade? Okay, what's our maximum investment per trade? Well, $500. So $500 divided by that 54.50 entry price, we can only do 9 shares. So let's put an order to do 9 shares of this stock. Okay. And so Mighty Quinn's asking, do I always use the 50-period moving average for this strategy? Yes, that's a hard, fast rule for this rule set. Could you use something different? Absolutely. Okay, this is just a very simple investing plan for new investors that want to have some sort of technical type of signal. Okay, but let me show you how to do this. So we're going to go over here to the trade page, and we're going to go to GM. All right, and we're going to do a right click, buy custom with stop. Okay, and we're just going to fill this out together. So we decided we could do 9 shares, so we're going to change this to 9 shares. We're going to lock that link together so it locks my buy and sell order together. Now, do I want to do a limit order or a market order or some other type of order right here? Okay, we set our entry price. We want to buy it if it goes above 54.50. Okay. 54.50 limit order, that would fill right now. So I need to do a stop order, a buy stop. This says, Mr. Broker, don't do anything until it hits 54.50 and then throw out a market order for me. Well, what if tomorrow or the next day it gaps up to like $58? Do I want to buy it for $58? Yeah, probably not. So let me show you. This is really cool. Change this to stop limit. And I know I'm going through this pretty quickly, but we're running out of time. And so, you know, go back and watch the recording if you have some questions. But on a limit, you can say, you know what? I don't want to buy it unless it goes above 54.50, but I don't want to pay any more than $55 for it. And we're just going to make that good till canceled. We calculated our stop to be $50.50. Hit enter. Make that good till canceled. And then, you know, just double check, confirm and send. And anytime there's anything red down here, you know, with stop orders, no guarantee the execution price will be equal to or near the activation price. And that's true for both buy stops and sell stops, but we did a buy stop limit. So if it goes above 54.50 and stays below 55, then that buy order will fill. And then when the buy order becomes filled, the sell order will become active at $50.50. And then, you know, you can buy that. We're going to set this in our group to do the 2 green arrow plan. You know, we're investing up to $500. We hit send order, and now that's going to be a working order on our chart. And it's kind of a cool feature. It's just, we have a working order here with this working stop, and none of these are, you know, we don't own the shares yet. Okay. So, and then Eva's saying, could we do an OCO like this? Sure. You know, if I wanted to set a target on this, I could. And if you're a technician, you might look at that and say, well, I've got some support down here at 48. Resistance is at 54. That's about $6. Short-term traders or intermediate traders might target out there about, you know, about $60 for this price pattern if it breaks out. All right. So hopefully that was helpful for you today, is to go through these different plans. You know, we talked about our plan 1, plan 2, and plan 3, kind of how we're executing those. For practice in your paper money, go, load that study set in there with the 2 green arrows. And you can, practice this on your own. We're using that S&P 500. Or S&P 100 is our watch list for this particular plan. And so hopefully that's helpful for you. Again, remember, everything we've covered today is for educational purposes and not a recommendation of any particular stock or strategy. Have a great day, everybody.